Are we entering a new kind of tech crisis? What if the same memory chips powering the AI boom are about to make every device in your life more expensive? And what if investors are celebrating record profits while consumers are heading straight toward a price shock? Today's video is focused on the memory crisis, and today's trading session perfectly captured the paradox: record demand meeting a supply squeeze. The morning began with optimism after a cooler CPI report. Markets opened strong, but by mid-afternoon, reality set in, especially in the memory sector. That early momentum cooled off, and by the end of the day, all four major memory stocks finished red. In this video, we're going to break down each company, why they moved the way they did, what's still bullish, and in the second half, we'll discuss something extremely important: demand destruction and the impact on consumers. Make sure you stay until the end because that part is critical. Memory prices have surged incredibly fast. Both DRAM and NAND are up more than 70% since late 2025. Meanwhile, hardware giants like Lenovo and Cisco are warning about skyrocketing memory costs and how they'll affect their products. This has created a tug-of-war in the market, investors betting on super margins versus fears that rising prices could eventually destroy demand. For me, today's narrative in the memory sector was clear: profit-taking. Institutional investors are trimming winners and asking one big question: how high can memory prices go before the world stops buying? Let's go company by company. Micron finished down about 0.56%, closing near $411.66. The stock sold off early, likely from algorithmic selling or profit-taking, then rallied nicely during the day before dipping again in the afternoon. It closed with a small green candle showing some late-day strength. After hours, it slipped slightly more. A report today suggested retail investors are still buying Micron, but institutional money has started trimming positions for the first time in 3 quarters. High memory prices are great for margins, but are starting to hurt Micron's biggest customers, PC and server manufacturers. That's creating fears of a potential demand cliff in late 2026. The call-put ratio spiked to 1.25, signaling strong fear and bearish sentiment in the short term. But historically, when fear gets this high, markets can be oversold. We may be approaching a sentiment extreme where a snapback becomes likely. Watch Micron next week. If key support holds, we could see a contrarian bounce. Sandisk also finished down, dropping about 3.72 cents and closing just above $626. But this stock has been extremely hot, up roughly 127% this year and recently hitting all-time highs. Today's move looks like classic profit-taking. Analysts are raising price targets to $851,000. The company is shifting away from spot pricing and toward multi-year contracts with data centers, locking in revenue and stability. Many investors view the dip as a strong buy-the-dip opportunity. Western Digital closed slightly lower, down around $250, finishing near $281.65. The bullish case here is its 100 terabyte storage roadmap. As AI moves from training to inference and archiving, demand for massive, low-cost storage is exploding. Western Digital is one of the only players scaling HDD capacity beyond 40 terabytes. With a reasonable valuation, it remains a strong defensive play in the AI ecosystem. Seagate also closed red, down about $5, but the company recently reported record margins driven by HAMR technology. Institutional investors have been increasing positions, signaling a shift toward the picks and shovels of the AI boom: data storage. Money is rotating from expensive AI chip names into storage infrastructure. Now let's talk about the second half, the part most people aren't discussing. Memory companies are posting record profits, but consumers are about to feel the impact. Reports show laptop prices rising significantly, memory capacity being reduced in base models, and gaming consoles and smartphones becoming more expensive. Memory can account for up to 35% of manufacturing costs in some devices. DRAM and NAND contract prices have gone parabolic from 2025 to 2026. As a result, shipments of PCs and smartphones are expected to decline this year due to higher memory costs. Consumers may hold on to devices longer, shifting from 2-year upgrade cycles to 4-year cycles. For investors, this is bullish. For consumers, it's a double-edged sword. Memory companies are protecting margins with a clear strategy. They are shifting production toward high-margin AI memory, vetting customers to prevent hoarding and prioritize high-margin buyers, phasing out older standards like DDR4 in favor of DDR5, and adjusting device specs to keep prices manageable. They're making more money by selling fewer chips and focusing on AI data centers instead of consumer devices. The memory supercycle of 2026 is real. We are in a scarcity phase. Companies controlling supply like Micron and Sandisk, and those providing massive storage capacity like Seagate and Western Digital are becoming essential backbones of the AI era. Watch Micron closely next week. If it holds the $400 level, we could see a strong contrarian bounce and possibly the next leg of this bull run. This cycle may still have plenty of room left. Disclaimer: this video is for educational and informational purposes only and should not be considered financial advice. All opinions shared are based on personal research and publicly available information. Always do your own research before making any investment decisions. Investing in stocks and cryptocurrencies involves risk, and you should consult a qualified financial advisor if necessary.